Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, March the 2nd. Today we got initial jobless claims February. Well, a little bit lower than expected and lower than the previous one. Still, labor market is super strong and super tight. So continuing jobless claims is also way lower than expected and lower than the previous one. So as I was mentioning, jobless claims, we are still need to see higher jobless claims for the Fed to start thinking, okay, the labor market is weakening. Until then, we have the uncertainty of what will the Fed do next interest rate hikes. So as long as labor market remains tight, I think it's going to be a really, really big question. And until then, we just have to wait to see new economic data. Other news today, we will see it later in a few minutes on the charts, but Tesla stock is down as investors, they fall short on specifics. Yesterday, they got the Investors Day for Tesla Master Plan Part 3, in which Elon Musk took the stage to present the new outlook and to review the achievements. But believe me, it was like super lackluster. So I think investors saw that as a sign of what the heck is Tesla doing and what they will do in the next few months is not clear. So they basically punished Tesla due to that. We will see it later. But first, this is the Nasdaq 30-minute chart. And as you can see, I was mentioning this pivot since a lot of days before. This is also a pivot with last week low. I have it in here. And look at this. We are unable to break that point. Signs of rejection. Big signs of rejection. So today, after yesterday's consolidation and more bearish, a little bit red finally, we were gapping down today and we tried to push higher. In the 1-minute chart, you can see a big push on momentum. Sell-offs were bought up again. And I mean, this is just 1, 2, 3, 4 rejection after rejection of last week's low, this blue dot line. So it's looking really interesting on the daily chart because as you can see, we are having this a little bit bottoming tail. So I think people bought the weakness this morning on this white level, but I don't think we are out of the woods yet as long as this pivot remains. And also since from yesterday, also a pivot in here. So previous support on last week low was resistance today. We will see what happens, but for sure, look at all these stopping tails, all these rejections right now below point of control, and in the red 0.57. S&P is 0.30. And the bad thing is that Tesla, as I was saying, look at this gap down on Tesla. Since yesterday, after hours, only in after hours, we got a really big pullback. 6% only after hours. Well, I think a lot of people try to bought that up until 200, but I think we lost 200 right here. And it was looking quite good, but it's going to be in the red for sure today. Now, not being able to hold the point of control. And I would think maybe we are seeing this pivot out and shorts will jump in for low of day. So we might see what happens. And overall weakness across the board in the Nasdaq. The only thing green is Microsoft and Nvidia, AI again. Microsoft is holding the train and let's see what happens. But today, after yesterday's and no big economic data, I think until tomorrow, it's just continuation to the downside. At least it's just the obvious thing to see after this rejection of a last week low. A lot of bottoming tails, a lot of topping tails. I mean, this market is just chopping around. Let's focus on the other part of the market that is doing really good. That is dollar. Dollar, as you can see, is pushing after yesterday's. I was saying we met the target in 105. We held 104, and I think dollar is right now very well positioned to try to sneak to the 200 SMA. This white indicator. So we'll have to see, but as long as dollar remains strong, I think in this economy, a lot of people is going to remain cash. So let's see the 2-year yield. Come on. We are approaching June 2007 levels, already at almost 4.94%. And the 10-year is spiking again, 2% today in the green. The 10-year is already crossing 4% and is just bouncing, is just pushing, ripping until maybe 4.30. That would be June 2008 levels. So really pushing yields. And as always, I mean, terminal rates are looking more and more. I told you yesterday in my video, 5.5% terminal rate in September this year is going to be, I mean, you already know, super painful for everyone. One thing interesting is that this is the 2-year yield curve, the 10-year minus the 2-year, the market versus the Fed, and this is pushing 5.42% today in the green. We were trying to go lower after this pivot. We are trying to move lower and go even more inverted with the outlook and the forecast of high interest rates that we are getting. But look at this, it's just pushing. So I don't know, but this is due to the 10-year spiking 2% today in the green. But still, let's focus on the interest rates futures. In summary, September 5.5 and December is not pricing in anymore an interest rate cut this year. Remember, Fed pivot 2024 at least is what bonds market are trying to tell us. What else is interesting? Well, look at this section at the bottom half of my quotes. XLU 0.72% in the green, XLP 0.81% and XLV 0.40%. You already know what this means. I have mentioned this in the past in my videos, and I will say it again. This looks like a rotation to defensive from Wall Street. Let's take a look to the charts that I usually bring that up in order to see more clearly how are sector funds performing, and you will clearly see that, as you can see, XLP, XLE, XLU, XLV, all in the positive. At the bottom, XLY, consumer discretionary. So consumer discretionary is Tesla, Amazon mainly, and now that Tesla is basically flashing, this looks like, well, let's take a look to the 5-day. 5-day consumer discretionary at the bottom. So they were trying to hold that, but I think if you check, consumer discretionary is gapping down. And at the same time, XLU is also at the bottom. But look at this. Look at this. This is today. Today, they are trying to push that up. And at the same time, consumer discretionary and all offensive risk on sectors are pulling back. So maybe today is the day in which they are starting to rotate again. We'll have to follow up on that because this is super interesting in order to see how they manage their positions. And that is giving you a clear edge on the markets. When you see Wall Street rotating to defensive, means that maybe this point is a critical point that is breaking to the downside. And I still think this is going to be the move. I still think this support at 11,300 on the Nasdaq is going to happen sooner or later. We rejected the 200 SMA, and this is super important. And now, today, in lower time frames, we are seeing that a lot of rejections at this last week low. And it is what it is. You just have to really bring all these pieces together and see what is really happening in front of your eyes. And I think it's clear rejection of higher pricing. Wall Street starting to rotate to defensive, and a move to the downside is really, really, really probable. So I think that's all for me for today. Thank you for your time as always. If you found this video useful, please support the channel, click the like button and subscribe to the channel to receive notifications when I upload new videos. Remember that I upload new videos every single day for market forecast, market updates, and market recap. I appreciate the time as always, but remember the trading day is not over yet. Discipline and risk management are key for success. Stay safe, everyone.